So finally, I'd like to have one last question that I need to direct again to all speakers. And so the question is, how do you see credit control strategy evolving in the coming years after COVID-19? As a business controller, what new development might you expect or predict? Bobby?
Let's put it this way, we've been around for over 30 years, right?
Yes.
I don't know, you look younger than us. Okay.
You look so.
I just looked.
You just
You look so.
Okay, we've been around, since 1987, when I first come out to work, there was like a Black Monday, October 19, the world stops, for like half a year, I don't know. Okay. Even the stock exchange market stopped for 4 days in Hong Kong.
Oh, really?
Okay. And then we got some good 10 years until 1997. And then we got the Asian financial crisis. And then the whole Asian countries, and devaluations of currency and all this. And then the world stops again. And then we have what? We have 2001 on September 11, 9:20, p.m. in Hong Kong time, I don't know, where were you? I
was in Washington, D.C.
Oh, good.
Hearing the jets.
Hearing the jets flying. Oh, where were you then? 9/11. 9/11.
In Hong Kong.
What were you doing when the?
Some among us. I was in the karaoke.
You were in the karaoke. Okay, good.
Singing song.
Okay. And I was playing, I was in the driving range, and I still remember, And that moment, because I've been around doing credit for more than 10 years then. And at that moment, I knew the world will stop for another, I don't know how many months. Okay. And 2003, we got SARS. And this time we got the COVID-19, and I thought it was SARS. And I was telling people that we're going to bounce back in summertime.
Yeah, 6 months. It should be gone.
Yeah.
It should be gone, yeah?
That's what everybody thought, right?
Everybody thought it's going to
That's
be.
why I moved here.
Oh yeah. Good for you. I mean,
Thinking it was over.
so basically, if you ask me, what's the question again?
How do you see credit control strategy evolving in the coming years after COVID-19? As a business controller, what new development might you expect or predict?
I predict the world will change a lot, especially if I'm a business controller. Okay, the way I do business, first thing, I will look into business that I will be able to collect money. I might not be very profitable, but because I need to increase my cash flow. If I can increase cash flow, I can survive. In fact, we cannot increase the cash flow, we won't be able to survive. This is something that I will look into that. Secondly, I will look into this ecosystem that Vincenzo talked about. Okay, instead of over-analyzing a company itself, how good they are, I would looking in the industry. I'll if I were, some credit managers, I would go to Griff and buy some industry report, right? I would go to TCM and get some industry data that I can use in my credit decision, because instead of over-analyzing a company, which I don't believe it's a good thing, okay, we should be looking to a big picture. I would, have a wide screen in front of me, and I will look into things differently. And thirdly, it's there again, if you want to analyze a company, you don't analyze a company, as I'm talking about. Yeah. You look into the trend, you look into, the supply chain, you look into the management background, you look at the characters, the characters of the manager. Are they people with visions, or they are people just trying to make short-term profits? And I would change my mentality in certain way instead of just doing what I've been doing in the past, instead of looking at what cars like he drives, or the
I don't drive.
you don't drive. Okay, he has a chauffeur, that's fine. This is something I really go into details.
Vincenzo, what do you think?
Well, you asked for predictions, so let me make a couple of predictions how the world's going to change and how credit risk control is going to change. I mentioned before the world is hungry to restart. They are hungry for opportunity. At the same time, we don't have the tools that we had before to control, monitor, and see our suppliers. This is a very good combination for fraudsters to come in and take advantage of people that want to get suppliers that they can't check on them. So my first prediction is that KYC and KYB is going to be a major change of how we do credit control. Quite frankly, lately it had become, ticking a box because it was a numbers game. You just wanted to make sure that compliance, you did it. But in the end, if you lost some money, it was small compared to the volume of growth you were having. Now there's going to be a lot fraud attempts going on. So KYC, KYB needs to be a focus. So that's a short-term effect as soon once COVID, let's say, is over and we restart. The second one, we've mentioned this so many times that I'll just briefly say the name, the interconnected supply chain. So looking at that, I won't delve more into that. The third element is, again, the business pre-COVID-19 was all about expansion. Expansion meant speed. Now it's going to be more about quality of your lending. You mentioned that before. And quality of your lending means not necessarily speed of expansion, but quality of checking. So I predict that there's going to be a lot more focus, not just on evaluating companies at a credit application moment, but it's going to be ongoing monitoring of your client portfolio, because you will need to immediately catch any signs of worsening that will happen after COVID-19. So a more comprehensive portfolio monitoring is going to be a shift that credit controllers are going to have to do. I'm not saying they weren't doing it now, but it's going to take prevalence over what it was before. And the final point, I guess, goes back to the tough question that you asked my friend Bobby before. How would you loosen credit risk? Well, he gave a very good answer. I'm just going to say I wouldn't loosen it, but again, rather than focusing on maybe only on the expansion, which you mentioned, the way that you loosen credit, or you at least making margin, is by reducing your risk. And how do you reduce your risk? You mentioned it before. Again, it's getting more data and getting more knowledge. The point is, in order to give more loans, you need to handpick which clients are going to give these loans to. You're going to have your margin plus risk. You need to reduce the risk so you can keep your margin high. To reduce the risk, you need data, you need tool, you need analysis, which obviously has a cost, but it's very limited compared with the risk that you're not taking home. So these are my prediction of how the world is going to change.
Okay.
Credit control strategy. Yes. As a matter of fact, it has been changing. Forget about COVID-19 for a moment. I mean, in the recent 5, or even I would say 10 years, when you talk about credit, it's not only about credit. It's about other risks. And that brings up to risk management, because we all know credit is only part of one of the many risks. We have economic risk, we have political risk, compliance risk. Like nowadays, back to my company, when we provide, reports, we call due diligence rather than credit reports. And we not only look at the company itself, but the shareholders, directors, management, middle management, a lot of things. And there are a lot of signs if you find the right provider, a quality provider who really knows about credit risk and compliance management, then you will get what exactly you have to get from nowadays business world in terms of managing your own credit. So in summary, I would say the strategy will be diverse and more deep finding than before. And as a business owner, your question is about what to predict what
Credit control strategy evolving after COVID-19.
After COVID-19.
Yeah.
And that one I mentioned already, right?
Yeah.
What?
So that's your comment.
Yeah, that's right.
As a business controller, what new development might you expect or predict?
So again, it's related to credit. Well, it will continue because, as I said, you can. I think my personal, opinion is there's never one day that in the business world, not only business, even consumer, credit card. It's all about credit. So if no credit card, the banks will be in trouble.
Yeah.
Credit card is the highest return of any bank's products. We're talking about 30 to 40% interest for financing, because we all know, when you pay credit card, the minimum pay is 1% of the owed amount.
Yeah.
So the more you owe, the more you pay. Okay, when you pledge a property, you only pay 1 to 2%, maybe, or it's 3% because it's secure credit.
Yeah.
Credit card or loans, they're unsecured credit. So they have high risk and high return. So again, not only commercial, but consumer. Commercial wise, of course, again, without credit, the world basically cannot evolve or continue the economic situation or the possibly booming status in the coming future, especially after the COVID-19. So that's my point of view.
First thing is, I don't think, the audience or the credit practitioner, we shouldn't be pessimistic at all.
Yeah.
Okay. It's not that worse. It's just manageable things. It happens. The economies will go up and down. Okay. Sometimes it's because of a financial situation, bad economy. We got the euro debt situation. We got the mortgages, the subprime mortgages, the things, it's always go ups and down, and this time it could be COVID-19 and 2011, we got the 9/11, it goes up and down. And every time, like people like us, we are in our 50s, 60s years old, we got experience and we have seen those things, we know that these things will come and then it will end. And then in the meantime, if you can survive, you don't do something, drastic, as long as it's manageable. They mentioned, all three of us, we're going to talk about tools because we sell tools. Okay, I thought Vincenzo was going to say something about KYC, KYB, you're going to go for Alvin Lida, but he doesn't mention that. But anyway, but we got tools out there. You can use it. A lot of people, I want to say that because a lot of credit managers nowadays, they come to me and say, oh, you got all the information and the web, or you don't need tools anymore. I said, no, it's not, because if you don't know, because you have situation information overload, you don't know what to look into it. A tool is something that helps you to do the analysis work and give you a possible prediction or answer to something, and then you interpret it. Okay, you don't rely heavily entirely on tools, but at the same time, it's don't tell me you got every answer in the web. This is something that don't go too pessimistic, and then but do something. I think this is a very important future strategy that you might go into it.
So basically, the reality is, if you run the business, you have to extend credit. If you don't extend credit, basically you're probably out of the market or out of the situation, and that's the reality, and happening for over 100 years, I would say. So the issue is how you manage it, and how you manage it in different economic situations. There are ups and downs, like Bobby said, and again, it's a reality. We're in the past 20 or 30 years, we've faced a lot of different scenarios, different economic situations. Like back to Hong Kong, the SARS time, we have more than 80 people bankrupt every day. That was back to 2003, 2004. Very serious. And again, and that also explains and that's probably the background of that positive data. Not possibly, that's the background, because by then the banks, they are not talking to each other. They don't even know that guy he's having a 30,000 monthly salary, and he's in fact owing more than $1 million because he has more than 10 credit cards, 2 loans, a lot of things. It's basically, unless one day, he wins the lottery. Otherwise, he will never be able to pay. So again, that back to whether you have a proper and a flexible credit system, or credit policy system or strategy.